Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Welcome back to the markets on this Monday. Hope you all had a great weekend. Today in the markets, we saw a gradual incline, but we didn't see dramatic moves up or down in the major indices. We did, though, see some individual stocks really making moves today, like Hood or Cart. And we're going to get into the reasons why here in a moment. But first, let's check out the market summary board to see where everything panned out today. We've got the Dow Jones up 0.15%, NASDAQ up 0.41%, S&P 500 up 0.21%, U.S. oil retreating back down some of the gains it had last week, down 3.05%. Gold, man, rocketing up to new highs again today, folks, up 1.82%. And Bitcoin fighting back up 1.85%. Really curious things what's going on that chart. We'll jump into that here in a moment. But first, the S&P 500 heat map. As we see here, NVIDIA, we've got some real big winners and losers. We've got NVIDIA winning well today, up 2.06%. We got Apple down, Microsoft up 0.53%. But then we've got some other reds appearing here. AVGO up, down 1.9%. QCOM down 2.33%. Boeing down 1.95%. Intel down 2.65%. And then Google, as we've already touched on, one of the bigger companies now pulling the stocks down. Obviously, ExxonMobil and Chevron feeling the heat with oil reducing on that chart. Tesla maintained green on the day, up 0.69%. So let's jump into some S&P 500 analysis. And we were talking about the battle of the parallels last week. And then we were talking about this inclining yellow trend line that you see here on the chart, how we tested this here on Thursday. Friday put in a nice bounce. Today we gapped up over this parallel border. And then we now traded the full day within that parallel range. Notice the low was the exact point in which that parallel has its bottom location. So this parallel for now is still saving price action. And as we notice, we see this yellow trend line now has been touched, 3 times now touched. That's a kiss. So 4 times, 5 times pierced, 6 times another pierce. So maybe 7th time is the lucky go around for a potential breakdown in the markets. I want to point your attention also to the SPY. Well, this is an ETF that does track the S&P 500. Notice this parallel on the weekly chart and this inclining yellow trend line here on the top. We're getting very, very close to a potential correction in the markets. Now, I know I've been saying this for quite a while, and really it's been puzzling. We haven't had one this long of a move up since April without a 5 to 10% correction is truly unheard of when you're talking about the monumental gains that have taken place here in the markets. Now, one thing to stay aware of for now, we do have the end of the quarter. And what does that mean? Well, the end of the quarter usually has window dressing take place. And you may say, well, Drew, what's window dressing? Well, a lot of institutions that may or may not have been in some of these big runners this quarter will start buying into those big runners at the end of the quarter so they can present their open book to their investors, their clients, and show them, look, hey, we were in Robinhood that was up 45% this quarter. Oh, we were in this stock and that stock that's all up X amount of percent this quarter. And that's a little trick in the game where towards the end of major quarters, big stocks that have had runs that quarter will likely start pushing higher till the end of the quarter. But hedge funds managers don't want to be buying stocks right now when they've had this huge run. So that could create a bubble in which that bubble will pop towards the beginning of next quarter where those hedge fund managers start unloading those positions, taking profits. That's something to always keep in mind towards the end of a quarter, especially when we run up so much. And that's what I think a lot is what is going on right now. So let's jump back into some charts and let's flip it over to the QQQ. You see here on the daily chart of the QQQ, today's price action pierced this trend line, but ultimately retreated right back down to finish the day here under $600 at $598.77 as we speak. Great move up on these 3 days. We'll see if this will be the conclusion, or maybe if we need to wait until October for some selling pressure to commence and push the price action back down on the Qs. For support, major support down here at 583.39. Next up, the SMH. SMH made new highs again today, guys. And last week, we were talking about some divergent signals on the chart, one of which being the SMH was holding up very well amidst amidst the 3-day selling pressure that we did see. It was very small, very tightly contained, but ultimately SMH made new highs. We're not going to close at new highs, but we did make new highs today, pushing up, making a high of $326.83. Should we continue pushing up towards the end of this month, which is only one more day, next resistance up here at 330.52, followed by this inclining trend line at $332.66. Both of which, that should be a very tough resistance zone on the SMH. Be paying attention to that over the coming days and weeks. Next up, IWM did have a decent push up today, but then it mainly gave up a lot of its gains. As you see here, it did finish up on the day, up 0.11%, but we were nicely higher and we did fall back down, filling the gap, ultimately made a nice 3-day move on the IWM. Next resistance will be back up here at 246.47, and that's going to be the trailing line right here, the 50% area of the parallel. Should selling pressure commence, we're going to be looking at support down here on the bottom end of the parallel at 234.84. Next up, we got the Dow Jones. Now, we talked about this last week also, how we had a daily topping tail, and then we also had a breakdown of this inclining trend line. Well, price loves to go back and retrace that trend line, and it did so very quickly on Friday. It tagged that trend line where it retraced. Today, traded within the range of Friday's price action. Now, the Dow Jones is not a leading indicator by any means. It's a small collection of stocks that are weighted very differently than the S&P 500. So I'm not using this as a leading indicator, but normally what happens when markets start to correct is that one or two indices starts showing, or one or two index shows the signs of it cracking before the others. And this is one of those that's showing that there may be we may be closer to the end of this rally than continuing on this rally and marching up higher on the charts. Next up, we've got Bitcoin. Fantastic move Sunday, continued through today, pushing back above this declining trend line that we had that was for an inverse head and shoulders pattern, as you see on the chart. So basically, this trend line is now simply a resistance and support trend line where price barreled through today. Next resistance on Bitcoin is going to be here at $115,179. But I want to bring your attention to something else on the Bitcoin chart. And I've cleaned up the chart on this one and erased everything. Now, notice what I've got drawn on here. We've got a massive head and shoulders pattern that did trigger over here on the end of last week, but has since recovered right back up. Now, I'm keeping this information still on this one chart because if price does break this inclining trend line right here, this could be a target for that break. Yes, we did break it and that trigger failed. However, I'm still keeping this on because sometimes around head and shoulder pattern necklines, price action does this, catches a small bounce, then ultimately fails and comes right back down, completing the measured move. So this is what the charts are telling me, especially if price is right around this neckline, around 111,300. Be paying close attention on this. If you're a bull on Bitcoin, you don't want to see price get down underneath that neckline and push lower. If you see here, we did break down, but we didn't have any following days push lower on the charts, allowing Bitcoin to be saved in at least this immediate near term. We'll check on this later throughout the week. Next up, we've got gold. As I said, guys, gold just keeps ripping higher on the charts, now pressing $3,828 as we speak. Great move on gold. Next resistance is going to be up here near the $4,000 mark on this trend line. As you see here, roughly, if we move up there in the next few days, we're talking about $3,976, which surely is capable of doing with this big push on this daily candle of gold. Wow, great move there on gold. Next up, silver. Another great move on silver. Now, we are beyond extended on both the gold and silver charts. We are due for some sort of pullback. Maybe that pullback will come after silver's hit this high pivot from 2011, which is at $49.83. That's the next major resistance on the chart of silver. Now, should we go up there, tag that, and start getting a pullback, or if we even get a pullback before then, the first support is $44.26, followed by $41.66. Next up, U.S. oil. Guys have been saying this for a while, and nothing's really changed. It's still bearish consolidation on the U.S. oil chart, even though we've had several days where we've attempted to move up. This is still all bearish consolidation. Nice move down here on oil. Support, as you see, is likely going to be coming right here around $61.77, which is the location of this declining trend line that we see here on the chart. First step first, let's see what happens when price gets there. But I do think with all this bearish consolidation, oil should be coming down lower near the $59.50 mark. Next up, nat gas. A little different story here with nat gas. We're heading into the winter months on the northern hemisphere, and so demand is starting to pick up for nat gas. As you see here, we did today successfully get above this inclining trend line that really has been attempting to do so back since the beginning of September. We attempted here, another attempt and failed, and then today we finally did get above and close above. Will we remain up there? We potentially could, and if so, the next target isn't far away here at $3.51 at this declining trend line. But it makes sense. The demand's starting to go up for nat gas. We likely are going to start pushing higher on this chart. Next up, a couple stocks making some big moves today, folks. Look at Robinhood, up 12.27% today. Now Robinhood is being added into the S&P 500, so we do have a lot of forced buying by different indices that track the S&P 500. So various ETFs are having to scoop up Robinhood, whether it be now or whether it have been within the last week. The deadline for doing so is tomorrow. So you will have forced buying on Robinhood up until tomorrow. Plus, like I said earlier in the show, we've got window dressing going on. So if you rewind the time back to the beginning of this quarter, look where Robinhood has accelerated to. This quarter alone here, going back to July, August, and September, look at Robinhood, nice 49% move up and then down from the lows in April. Look at this, guys. Robinhood's up 359% just since the April lows. Now, Robinhood has had developments. They're starting to allow potentially people to start shorting. They've rolled out derivative trading with cryptocurrencies as well as with the NFL. Now, previously they were denied this sports betting option, but then they've now since rolled it in with the NFL. That's now staying. We'll see how long it does stay, or if it starts growing into other sports where they basically can trade a yes-no sequence where will the Bills win this game? Yes or no. And so they're basically trading derivatives on those types of bets. But in essence, Robinhood it has been a brokerage and looks like it's now starting to become a sports book combined with new banking features and a crypto exchange. I mean, what is Robinhood not getting their hands in, which is probably why it has been excelling so much since the April lows, but still 358%, guys, what a run. If I was a hedge fund manager, I would be buying this up to show my clients as well. Even though that's kind of a dirty game, you want to be in the hot stocks if you're going to be handling and managing people's money. Next up, we've got Instacart, C-A-R-T. You can see here that we hit a decent decline today, down 10.4%. And that was because news came out that DoorDash and Kroger have created a partnership to deliver their groceries. And you may be wondering, well, what difference does that make? Well, Kroger is the largest grocery store per volume in the United States. And so that's a big hit to Instacart's potential for increased supply and also sales. So you see big fall down here on Instacart, but that really has been starting ever since you see this high pivot back here at the beginning of August. So far now, back then we were at $53, now all the way down to $37.92. Next major level of support is $37.23, followed by $35.14, which is also this pivot low that you see back in April. So we could be retracing all of that. Look at the contrast between the last chart with Hood up 350% from the April lows, and here Cart coming all the way back down, potentially testing those April lows in the next foreseeable future. But also notice what we've done. We've broken a longer term inclining trend line. Price likes to usually break these, and once it catches support, either 37.23 or 35.14, it likely will go back up and retest this inclining trend line. That could create a near-term swing trading opportunity for you on Cart, because this is a great sell, oversold in the near term, no doubt about it, down here at the 26.13 on the relative strength indicator located at the bottom of the chart. All right, next up, we've got Kava, another stock that has made a complete drop. You look back here at November of 2024, as well as right up here, this high pivot that we had at $172.43. We're now trading down sub $60, folks. Now, notice we did pierce and touch this area of support at $59 today. Next major level of support is going to be $46.24. Notice this level at 59, how it corresponds with this low pivot and this high pivot here back on the charts. Those are usually support levels I love. I'd be very surprised, even if price does come down here to 46.24. I'd be surprised if price stays down there very long before it rockets back up to retest. This is a major level right here at $59. And ultimately, when price breaks inclining trend lines, we like to go back and test those trend lines. So upside potential from these support areas right around $72.12. Next up, we've got Meta. Now see here, a few different things are going on this chart of Meta, all of which are starting to point that we are on a cliff, folks. You can see here, I've got a left shoulder, a head, and a right shoulder. We're about to fall off that cliff. Now you see on Friday, we did close underneath it, underneath this neckline, but we didn't get a confirming move today, pushing price down beneath Friday's candle. We basically chopped sideways. Now tomorrow and later in the week, be watching the low pivot on Friday. If that gets breached, we're coming down to 721 and then potentially all the way down here to 656.45 on Meta, as that would be the measured move for this head and shoulders pattern. So there's some serious potential downside in the near term for Meta if this pattern does play out. So keep that on the radar. Next up, Netflix. Very similar situation here, folks. We also have a left shoulder, head, and a right shoulder with the potential measured move down here at 951.65. Now notice, price action has not gotten beneath this neckline. The neckline currently is at $1,173.13. So be watching that level for a potential break. And if that does break, that's where price is going to be headed on Netflix, down sub $1,000. There will be stopping points along the way. Just as I said on the previous charts, when we break trend lines, we catch support, usually go back up and test that trend line, then eventually start falling down further on the charts. But this is a big down move on Netflix, and the charts are showing it is a potential. So it's important for me to convey this information to you in case you are interested and or if you already have a position in Netflix. All right, guys, thanks again so much for tuning in. My name is Drew Dosick. Don't forget to like and subscribe. Send this to your friends. We want to help them to become financially independent. Until then, I'll see you guys on the chart next time, and I'll see you tomorrow. Take care, folks.